Welcome to this deep dive. We're zeroing in on Asian Paints, specifically their recent financial performance.
Right. Our mission today really is to pull out the key insights from all their latest official stuff, the investor presentation, that earnings call audio, press release, the filings.
Exactly. We want to give you a clear picture of their Q4 FY25 and the full year results. Get past just the surface numbers, see what's really going on with trends and strategy.
Yeah, synthesize it all so you get a good grasp of where they stand right now. Not just reading out numbers, but, what do they actually mean?
Okay, let's unpack this then. Starting with those headline figures for Q4, the last quarter of FY25. It kind of looks like things slowed down a bit.
Definitely looks that way. Consolidated net sales, they dipped 4.3%, came in at what, 8,329.6 crores.
Yeah, that 4.3% dip, it does feel significant compared to maybe previous periods. Suggests some market headwinds, maybe?
Could be. And if you look just at their main India operations, the standalone numbers, that was down 5.0% to 7,157.1 crores.
And profitability. I saw the margins were squeezed too.
Yeah, that's noteworthy. Consolidated PBDIT margin. PBDIT being profit before depreciation, interest, and taxes, kind of like operating profit.
Yeah.
That fell to 17.2%.
Okay,
Down from 19.4% the year before. Same story on the standalone side, down to 18.5% from 20.6%. So yeah, pressure on how much they make per sale, not just lower sales.
Right, and that pressure really jumps out when you look at the profit before tax figures, doesn't it?
It really does. Consolidated, it's down quite a bit, 25.8%. That's 1,205.2 crores. And that's before exceptional items.
Wow, and standalone.
Similar story, down 23.9% to 11,158.8 crores. It's a steep drop.
Is that just the lower sales or something else dragging it down? Seems like a big fall.
Well, that's a good question. And the documents do mention an exceptional item, a charge of 179.8 crores.
Okay, what was that from?
Mostly relates to White Teak, one of their home decor acquisitions. It's an impairment charge on the investment, plus a loss related to valuing future stake purchases.
Impairment, meaning they had to write down its value because it's not expected to perform as well as they thought.
Exactly that.
Yeah.
They've essentially said, okay, our initial expectations for White Teak's future earnings are lower now.
So it looks like that push into certain home decor areas isn't going quite to plan. And it's really hitting the bottom line. The standalone net profit number was down massively, wasn't it?
Yeah, a huge hit, down 42.6% to euro 694.3 crores.
Ouch.
Yeah. It really underlines that the challenges aren't just about sales volume, but also about how well these strategic bets and newer segments are doing.
Okay, let's zoom out then. Look at the full fiscal year, FY25. Does the pattern hold?
Pretty much, yeah. Consolidated net sales for the whole year down 4.5% to euro 33,797 crores.
And standalone.
Also down 5.4% to 29,421.1 crores. So yeah, a tough year overall for growing that top line.
But it wasn't all bad news, right? I saw something about the dividend.
True. It's not entirely negative. The board recommended a final dividend, 20.55 per share. That brings the total for the year to 24.80.
So even with the tough year, they're still focusing on shareholder returns.
Seems that way. It signals that commitment. Record date for that final dividend is June 10th, 2025. Payment should be around or after June 30th.
And the AGM.
Scheduled for June 26th, 2025. It'll be virtual video conference again. So yeah, despite the dips, they're still sending value back to shareholders. Maybe we should dig into the segments now, see how each part contributed.
Good idea. Let's start with the core, the decorative paints business in India. Now, this is interesting. Volume actually grew 1.8% in Q4, but revenue declined 5.2%. How does that work?
Yeah, that's a really key point, isn't it? They sold more liters of paint, but the money they got for it went down.
So what's driving that?
Well, the company pointed to a few things stacking up. Demand generally softened. Consumer sentiment was a bit shaky, maybe people holding back on spending.
Okay.
And they specifically mentioned downtrading, people choosing, the more budget-friendly options instead of the premium stuff.
Ah, right, like picking the store brand instead of the fancy one.
Exactly. Plus, they said competition got tougher. So all that together means, yeah, more volume, but lower average price per unit sold.
Makes sense. Okay, what about the international business? How did that fare?
That saw a value decline, 1.5% in Q4. But, and this is important on a constant currency basis, it actually grew 6.0%.
Whoa, big difference. So currency movements really hurt them there.
Hugely. It really highlights how exposed their international side is to currency swings and, wider economic instability. Especially in Africa, they mentioned significant currency devaluation hitting profits hard.
But some areas did okay.
Yeah, Middle East and Asia showed positive momentum. They also mentioned Sri Lanka and Nepal are recovering, but they flagged some concerns about Bangladesh.
And the overall profit picture internationally.
For the full year, FY25 PBT before exceptionals for global operations was 3,066 crores. Q4 contributed 140 crores of that.
And breaking that down?
Asia brought in 347 crores PBT for the year, just 9 crores in Q4. Africa and Middle East, 128 crores for the year, 14 crores in Q4.
Got it. Let's switch gears to industrial paints. That seemed more positive.
It did, yeah. They reported sustained growth there, pretty broad-based too, across general industrial and automotive coatings.
What were the revenue numbers like in Q4?
For APPBG, it was 485 crores, and for PPGAP, their joint venture, 2,137 crores. And profits look decent too.
Yeah, PBT for Q4 was 59 crores for APPBG, and a pretty strong euro of 375 crores for PPGAP.
Although they did mention APPG's profits dipped a bit in the quarter.
Right, but they said that was due to investing more in the sales network, didn't they?
Exactly. So spending money now for future growth in that industrial segment sounds like.
Okay, now, home decor. We touched on White Teak's issues earlier. It seems like that whole segment faced some challenges.
It did encounter some headwinds, yeah. But it's a mixed bag within home decor. Bath fittings, for instance, actually saw sales increase 3.7% in Q4, hitting 91.9 crores.
Oh, interesting. And the losses there?
They actually reduced the PBDIT loss in bath fittings, which is encouraging.
Okay, but what about kitchens?
Different story there. Kitchen sales decreased by 15.5% in Q4, down to 85.1 crores. And they slipped into a PBDIT loss, whereas they'd made a profit the year before.
Right. And then White Teak, we know about the impairment, but the sales drop was huge too.
Massive drop. 57.9% down in Q4, only 20.1 crores in sales. They mentioned issues with product specs and problems with inputs from China, leading to those impairment losses we talked about.
And Weather Seal, another part of that group.
Slight sales increase there, 3.4% in Q4 to 16.2 crores. But it also had impairment losses booked against it.
So some real struggles in parts of home decor.
Yeah.
But they're still committed to it overall.
Oh, yeah, definitely. They highlighted some strengths, too, like wall coverings and textures. They say they're #1 in India, contributing about 4.5% of decorative revenue. They're doing collaborations with designers there.
And other areas.
Fabrics and furnishings, they claim #2 spot.
Yeah.
Decorative lighting, #1, though obviously hit by the White Teak issues. And modular kitchens, also #1.
So despite the White Teak setback, the overall ambition is still to dominate that home decor space.
Absolutely. That seems to be the goal. They're aiming for that integrated home decor player position. But yeah, the White Teak impairment is definitely a bump in the road, shows integrating acquisitions can be tricky.
And their beautiful home stores, that seems key to the strategy.
For sure, 72 stores across 53 cities now, and they're still expanding new ones in Surat, Mumbai. They also launched something called Nilaya Anthology in Mumbai.
Yeah, a huge 1 lakh square foot retail space, really pushing that premium experience.
Definitely signals their intent there. Okay, maybe we shift to their strategic highlights. Innovation seems high on the list.
Yeah, they said new products made up about 14% of revenues in Q4.
Which is quite something. Over 300 new products in the last 5 years, 130 plus patents, shows a real R&D focus.
And the premiumization drive.
Very evident. Revamped packaging, those regional packs like Ultima with QR codes linking to local culture.
And ingredient marketing, like mentioning specific stuff in the paint.
Yeah, like graphene and Ultima Protect, Teflon and Royale, highlighting the tech inside, plus pushing futuristic stuff like Smart Care Infino with a lifetime warranty. Big claims.
Revises seem to be doing well too, painting services and contractor services.
Yeah, strong growth reported there, good net promoter scores apparently,
Yeah.
and they're in over 600 cities and towns now. That direct consumer link seems important.
And B2B?
Also strong growth in Q4 across corporates, builders, government projects, so diversifying beyond just retail customers.
They also talked about backward integration, right? Making their own materials.
Big focus there. That white cement plant in Fujairah should be running by June 2025, and a new emulsion plant eco-friendly, starting up partially in early 2026, fully by 2027.
Aiming for better margins and maybe faster innovation with that control.
That's the idea, yeah.
Yeah.
Improve margins, control supply, potentially innovate faster.
And distribution keeps growing too. 169,000 touch points.
Huge network. And they're still pushing, looking at smaller dealers, smaller towns. They see a lot more potential reach compared to, say, FMCG companies.
So pushing premium, but also covering the budget end with Ace and Tractor.
Exactly, a bit of something for everyone. And that Herger campaign, stressing quality, trust, claiming every second house uses their paint, it reinforces that brand strength.
They also mention ESG environment, social governance.
Right. Making progress on things like water use, emissions, and socially, that Color Academy training program for painters, plumbers, carpenters trained over 845,000 people. That's quite an impact.
Okay, let's talk market outlook and challenges. They admitted Q4 was tough.
Yeah, acknowledged challenging demand, especially hitting the decorative side more than industrial. Said the whole paint industry had a tough year, really.
In competition.
Definitely a major factor. Said it's intensified, their response. Focus on value, lean on their network, keep innovating. They do expect overall market spending to increase, though.
What about costs? Raw materials.
They expect some softening there, which would help margins. Watching the rupee, too. Said they've seen some deflation recently.
So looking ahead to FY26, cautiously optimistic.
That's the phrase they used, yeah. Pointing to potential positives like more government spending, maybe a pickup in mid to luxury housing, and hopes for rural demand if the monsoon is good.
And their growth target.
Aiming for single-digit value growth for FY26 and sticking to that 18-20% consolidated EBITDA margin guidance.
But still aware of risks. Geopolitics, trade issues.
Absolutely. Flag those uncertainties. And also that downtrading trend we mentioned earlier.
There was talk on the earnings call about warranties too, right? As a quality signal.
Yeah, they position themselves as pioneers there, introducing warranties 20 years ago. And how they're tackling competition, targeting younger demographics, Gen Z, with things like new color systems, AI tools for visualization.
And internationally, the plan is consolidation, aiming for top spots.
Right. Get into the top 2 positions in key markets. And they're looking at their home decor businesses, too. If a brand isn't on track for number 1 or 2, maybe consolidate it.
Interesting. What about the competition itself? Newer players versus the established ones?
Yeah, they discussed that. Management seemed to feel the existing players, maybe like Jordan Paints or Nippon, were more affected by the very newest entrant. They sort of questioned if just buying sales aggressively is sustainable long term.
There was also a point about paint prices versus income levels. Affordability.
Comparing India to developed markets raised questions about affordability and how that impacts growth, though they did say industry gross margins have actually improved over the last decade.
And that whole volume versus value growth debate came up again.
It did. Using terms like underlying volume growth, it's always a bit of a discussion point.
And looking way ahead, any talk of them getting into cement?
Yeah.
Beyond just the white cement plant?
It was raised as a question, yeah. A potential long-term possibility building on that initial step, something to maybe watch down the line.
And finally, that new emulsion tech they're building.
They seemed quite excited about that. Environmentally friendly, cost-effective, versatile for different products. Sounds like a key part of their future tech platform.
Okay, so wrapping this deep dive up, it's clear Asian Paints had a challenging quarter and year, especially on the decorative side.
Definitely. But the industrial business showed strength, as did some international markets if you adjust for currency.
And strategically, they're sticking to their guns, innovation, premium push, integrating backward, and really going after that home decor space.
Right. Cautious optimism for FY26, hoping demand picks up, but very aware of the increased competition and how consumers are behaving.
So maybe the final thought for you listening is this. With all this competition heating up and customer habits changing, how well can Asian Paints really use its strength, that huge brand, the massive network, their innovation track record, to stay on top and hit those growth goals?
Exactly. What are the key things you should watch to see if they're succeeding? Like, how do those margins hold up? Can they turn around those challenged home decor bits? Does the premium strategy work against the downtrading? Lots to keep an eye on.
Definitely food for thought.
Yeah.
We hope this deep dive helps you connect the dots and think about what might come next.